to the MUFG Global Markets Asia podcast. Today is March 7th, 2025. With us is Dr. Lin Li, Head of Global Markets Research for Asia, to reflect on the key takeaways from the annual two sessions meetings happening now in Beijing. The following podcast is for informational purposes only. It is intended for professional investors and eligible counterparties and not for retail clients. Any content should not be regarded as an offer to conduct investment businesses or investment recommendations. Hi, morning, Lin. Thank you for your time today. So the two sessions meetings have kicked off, and Premier Li Qiang delivered a work report for 2025. What is the most important message we should take away from this?
Good morning. This year's government report implies a clear signal that China pursues a transition of its growth model. So the policy actually focuses more on consumption, people's livelihood. Also, advancing technology and industrial innovation foster emerging future-oriented industries and accelerating the high-quality development of key manufacturing chains are key messages.
Maybe could you help us recap what these policies are?
The policies really cover a wide range for this year to achieve various numeric targets. Government roll out many policies spanning from fiscal, monetary, and also talking about industry level policies, covering topics on, the extensive support for the application of large-scale AI models, and also talk about implementing free school education, and also will launch special initiatives to regulate enterprise-related law enforcement, and it talk about expand high standard opening up and stabilize foreign trade and investment. So it's quite ranged. So definitely I will cover later in our conversation if you are interested.
What are the key numeric targets for this year?
The key numeric targets includes the growth target for this year, which the new work report set it to be around 5% real GDP growth for 2025. Also, the report outlined around 5.5% for surveyed urban unemployment rate, and also it has a target to supply over 12 million new urban jobs, and it wants to achieve around 2% CPI inflation. And also importantly that China aims for a larger budget deficit to GDP ratio of around 4% for this year, and many more.
So they've already announced that they have a growth target of 5% on this year's GDP. What do we think about that? Do you think this is a realistic target?
I think that with this year's proactive fiscal policy and also moderately loose monetary policy, and furthermore potential policies that can be rolled out by Chinese government, still it is possible. And one thing I want to talk about is that why China still kind of rolling out a 5% growth target is that as emphasized in this work report is, this 5% target is not only necessary to stabilize employment and prevent risks and benefit people's livelihood, it also has the support of economic growth potential and favorable condition. So definitely it shows that the government is willing to, working hard and send out a positive sentiment to the society, especially when Chinese economy is facing mounting pressure from US tariffs, etc. Another thing I want to point out is that, China also lowered its CPI inflation target to 2% this year. It was 3% for last year. So this actually signaled that the Chinese government pay more attention to the nominal GDP growth, which we saw that for the 2024, China's nominal GDP were only grew by 4.2%. So, the stronger nominal growth is very important for corporate earning growth, for people's, wage growth, etc. So that is helpful for consumption. So in short, I think that it's achievable, but have to with effort.
Let's move on and talk about fiscal policy. Is there enough to ensure China's 5% growth? What's new about this year's fiscal structure?
Yeah, fiscal policy is a key for 2025 growth in our view, and we see positiveness in this year's fiscal policy. So government set a larger budget deficit of 4% for this year, higher than last year's 3%. And the details of the funding shows that there will be an additional 2.4 trillion fiscal fund made available for stimulating the economy this year. So the size of 2.4 trillion fiscal funding is about 1.7% of GDP. And if you measure by the broad fiscal support angle, so the overall broad fiscal, support relative to GDP will increase to 8% this year, up from last year's 6.6%. And in terms of the structure, we see better structure this year as well. So we see that government has increased focus on improving people's livelihood, stamina, and the value of and the use of funds as well. So the report said to pursue people-oriented macro policies, right? The and also the shift to promote consumption and using consumption upgrading to lead industrial upgrading. And they said to create a new growth engines while ensuring and improving livelihood. So this is really the core of the structural change of fiscal spending. So we also see there will be a push for more financial resources to invest in people, which is very new mentioning as well. And fiscal money will help to expand employment and strengthen consumption incentives. So this year we're going to see, 300 billion renminbi worth of special ultra loan central government bonds. This is twice the size of last year's. So be arranged to for the consumer goods trading programs. So there are positive development on the structure side as well.
The work report mentioned leveraging on monetary policy to support the economy. What are the expectations on the People's Bank of China this year?
In recent months, we see that the actions of PBOC are quite muted. So the work report actually sent out a clear statement of, in the future that it's possible that they're going to cut more on both triple and policy rates and keep liquidity ample, pushing the overall funding costs lower. So we can phrase that as a moderately loose monetary policy for this year. So our house view is that we expect PBOC to start with triple R first. So for the whole year, we expect a 100 to 150 bips total triple R cut for the course of this year. And we expect furthermore 40 bips policy cut for this year.
There's been a lot of attention on the property sector. What about the policy stance on it?
Yes, property sector definitely is a concern for the China overall economic development, not just about the sector's development. And also, the declining housing prices is one of the reasons that, consumers are reluctant to consume. So We see a positive stance on the real estate sector. So you can see that real estate sector appeared in many parts of the work report. For example, it was stated that for monetary policy stance, we see the report said there will be greater efforts to be made to promote healthy development of property and stock markets. And also the report emphasized a continued effort to promote real estate to stop falling and stabilize. And for the private sector, the report also said to revitalize existing land and commercial housing, promote the acquisition of existing commercial housing. And most importantly, I would think that the reports had to give local government greater autonomy in terms of acquisition entities, prices, and uses. So it is also our view that the sector will stabilize later in the middle of this year and begin to recover moderately till the end of this year.
What are the policies this year on the financial markets? Any specifics on the renminbi policy?
Yes, actually stabilizing the stock market is put in the section of overall social requirements and the policy orientation for social development. And one of the goals of monetary policy this year is to promote the healthy development of the stock market. The report also stated to vigorously promote the entry of medium and long-term funds into the capital market, strengthen strategic reserves, and construct market stabilization mechanism. So other items such as reform and optimize the schemes of stock issuance and listing, mergers and acquisition could be helpful for the stock market. For the bond market, it mentioned that to accelerate development of multi-layer bond markets. On the currency, the tone hasn't really changed. So the report mentioned to maintain the basically stable renminbi exchange rate at a reasonable and balanced level in the report. So it's our view that renminbi will face some stress going forward as the negative impact of tariff beginning to show more evidently. So we are still seeing 7.5 during the middle of this year, given the U.S. tariff, and most importantly, the continued tariff uncertainty that U.S. might impose on China.
Let me just, have a final question here. Are there any other thoughts about some of the other initiatives that they announced? I mean, there seems to be greater interest in enhancing research and development and self-reliance on for its high-tech industries, for example. Any thoughts on that?
Oh, yes. So these are actually quite important. So we definitely saw much richer content on the technological side for the industrial policy and kind of the emerging industry. So stimulate the innovative and creative vitality of the whole society is key for China's industry policy for this year. So there are various sections cover this, and also, the mentioning of investing in people are trying to address, provide enough talents to realize such skill. Also, emphasis of investing people is quite consistent with this goal. Make the more available talented people to realize this technological pursuit of the overall economy. One thing I want to point out is that when facing such a trade barrier from US, I think that in this report, it also talk about optimize international cooperations in industrial chain and the supply chain. So that is one of the focus. It talk about how to improve the international trade and infrastructure construction and cross-border logistics. So I think that the government is trying to make China stay relevant in the global supply chain.
I think it's definitely going to be a very interesting year ahead. Thank you so much for your time, Lin. We'll hope to catch up again in the next session. Take care.
Thank you. Take care.
Thank you for listening to the MUFG Global Markets Asia podcast. This episode is available on Podbean, Apple Podcast, and Spotify. A copy of Lin's report on the 2 sessions meetings is also available on mufgresearch.com. Rate, review, and subscribe, and reach out to an MUFG representative for business inquiries.